Hi, this is Jack from Alpha Charts with a state of the market video. Today is January 30th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security, and I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. Also, if you like these videos, please like and subscribe to my YouTube channel. Also, I am on Twitter at AlphaCharts365. Okay, so let's start with the SPX like we always do. And yeah, it was a rough week this week. You can see it was almost, mostly selling the entire week. We finally, broke through on a closing basis the 23-day EMA. It moves a little bit lower. I think your 65 is the next level of potential importance. It kind of coincides with this area of consolidation, so that may offer some support. And then below that, this area right here, which was the original breakout for this move higher and around 35.50 or so. All right, that's SPX. Looking at the Qs. So the Qs is really the one that I watch more intently because it does cover the stocks I tend to trade more often. And as you can see, the 23-day EMA has held on a closing basis like a champ until Friday. So Friday was the first violation, and it was 2% down day. Nothing very good about that. Also on the weekly, you see that weekly candle is not very pretty. Not a bearish engulfing, but not that far away from one either. So it definitely shows that there was pressure to the downside, obviously. Once again, you have the 65-day at 305 or so, 305.50. And so that may offer something. Let's just look at where the 50 is here. The 50 days at 309, right? A lot of people look at the 50-day, so don't be surprised if we tag that. I use the 65-day, gives a little bit more room, and it's roughly 3 months of trading. So that's why I use the 65-day. Anyways, so we got 305 here and right around the 300 level there. So we have roughly another 3% or so to the 65 and about 4.5% from our current position to the 300. Now, just going from top to bottom, roughly a 10% move, right? If you look at it actually from the actual peak right here to here, it's roughly 10%. So that would be a normal pullback within the context of an uptrend. So if this does come back all the way to 300 or so, that would be normal, even like 297. I think that would be totally normal as long as your time frame is a longer time frame. If you have a much shorter time frame, this will cause a lot of pain. But for longer time frames, a hold at, we'll call it 297, and then a bounce higher, that's just part of the potential price action that could go on. So that's the Qs. IWM, again, violated the 23-day EMA right here. About the same. Again, it was the strongest of all the indexes coming into there. I mean, look at this channel right here. So it looks really good. I would not be surprised if it comes back and maybe fills this gap right here. That's a possibility. That's right around where the 50-day is going to be. So, that could be right there. But it still is the leader as far as I can tell. IWM. All right, let's look at XLF. So XLF, we talked about how this was the Charlie Brown football index. It kept coming over here and here and here and here and just kept getting rejected, right? So that's on the weekly. Here we go back to daily. It got rejected. Now it's pretty weak because it actually already sliced through the 50-day, right? Which we haven't seen that on the indexes yet. So it's already gone through its 50-day. Here's the 65, and a consolidation area is kind of coinciding with it. So it'll be interesting to see if this $28.50 to $29 offers some some potential support for the XLF for the financials overall. Looking at SMH, again, slice through the 23-day like we've been seeing, but has not even come to the 50 yet. So that's good. It may come down there 220, right? And 215 for the 65. And I consider this area, maybe all the way to 200 or so, really, really important. But if it comes down there, that's a pretty big decline, right? From top to bottom. It helps if I click it from top to bottom, that would be a 20 or 25% decrease. I don't think that 10% level would be right around that 50-day. That kind of makes sense in the context of this strong uptrend and strong market that we are in. We always look at lumber, and as you can see, lumber, got to the special point, potential resistance, just like XLF. It looked a lot like it in some ways, and has been rejected since. We'll see where the pullback goes to. Their 50-day is right here, and here's your 65. So that would be the first areas of potential support. But there's not a lot going on in here. So I wouldn't be surprised if this could pull back even a little bit more. Really use this as an indicator. I see this start to recover quickly. That would be a very positive, I think, outlook for the market, in my opinion. Let's look at, next up, let's look at bonds. Because this is really, I think, an important chart here. All right, so bonds have since November really respected this downtrending 23-day EMA, and now it's starting to make a higher low. It's done it before. This isn't like right here, right? It hasn't valued the 23-day, but it's done it before. So are we making a bottom here and then they're going to start to go back up? That would be definitely the more bearish scenario. If not, we'll watch it and see. If they start to roll over here and they make a lower high, then that would be definitely the more bullish scenario. So definitely one I am watching to see, does it get above, 1.54 and above the 65 day EMA? That would be, that would be something to watch. And also, not only that, but the ascent rate. Are we looking like this, right? Do we look like this? Or are we looking, kind of like this, right? Like this is, a choppy, ugly, just hard to trade market. This is a bear market. So how the rate of acceleration, if it does, that would be something that I'm watching. As of right now, it's definitely cautious and has the yellow flag out for me. Next up, let's look at the VIX. The VIX had a big spike this week, as expected, with the volatility. We'll see what happens. So on Friday, even though it made a new near-term low in the market, the VIX did not make a higher high. I think that's a positive. It's still elevated, so it's not too much of a positive, but I think it's a positive that we didn't go get above, this 37 level. We'll see what happens next week. And if it takes out 37, starts moving higher, again, just like the bonds, the rate of ascent matters, I think. So we'll see if it's just one little quick spike and then it kind of rolls over like here and like here. Even like here, these quick ascents, and then it rolls back over. Even on the way down here, you see it's a quick ascent, roll back over, quick ascent, roll back over. Whereas these, it was quick ascent, a little check back, and move higher. So we got to keep an eye on that. That's the VIX. Let's see what else. We're going to look at the value line geometric index. And this had a nice breakout and then it fell over. So this is a market breadth indicator that I use. And it's just saying that people are selling broad base. It's not just mega caps or large caps. It's small caps, mid caps, everything, tech, whatever. So they're selling. So that is, again, yellow flag concerning. Do we get, does it kind of come back, check at the 50-day and then move higher? Okay, that's fair enough. Do we slice through the 50-day? That'd be a bigger problem. And put call ratio, right? So as you can see, people are starting to get a little bit more bearish out there. Good. Let them. Um, so right now we're not, we're kind of in no man's land. This may just be the reset needed in bullish optimism that the market needs to move higher. Time will tell. We're nowhere near any extreme on either way, so that's probably a good thing what the market needs, not like up here, which was kind of, my extreme level that I mark, or even down here. Now, again, in my opinion, fear is a better indicator than greed. You could say greedy for a long time, but fear doesn't tend to stay for a long period of time. So as of right now, though, it's kind of no man's land, indecision, the way I look at it. Let's look at gold. I've been looking at gold recently on these videos. I think it's a good one to watch. Again, not only as a tradable asset, but really risk on, risk off. We had this kind of inverse head and shoulders that it was trying to build out. And, it's still building it. Remember, this is, a year or almost 2 years. We'll call it a year. From here to here. So where do we start in here? That was August. So we'll see if it starts to build the right side of this shoulder. If it does, we're in a different market environment, I think. And looking at gold SPX, this was another one I like to watch for outperformance. So last week we talked about gold was going to be at a decision point, right? If it breaks down below here on the ratio chart, I think that this is a bust pattern, but it hasn't so far. Kind of bounced back a little bit. So we'll see what it does. Hasn't broken this downtrend line yet, but has not broken this right shoulder yet either. We'll see if it starts to build the right side of a base, or shoulder, I should say, and we'll see if it can start to outperform later this year. Again, just something I'm watching on a potential for a trading vehicle, as well as a risk on, risk off indicator. All right, so let's look up MFI. So we also talked about the percent of stocks above their 50-day moving average, and how it was kind of, again, showing some froth, staying up here for such a long time. Well, this broad-based sell-off has rectified that. We are getting that reset that's needed. How far does it go down? I don't know. We'll see. But as you can see, most of these resets go down either to the 50% mark. Sometimes they go down a little bit further. These are bigger sell-offs, obviously. So we'll take a look and see. But again, this is for the 50-day moving average, percent of stocks over. All right. So going back to the Qs, and the market as a whole. I mean, I definitely think the yellow caution flag is out in the market, depending on your time frame. For me, I'm a longer term swing to position holder for as long as I can. So I'm watching my specific stocks to when they give me an exit signal, I will take it. Some have already. I've cut my weaker stocks, the laggards. And I'm still holding, probably 85% of my holdings. I'm still invested in the market, because as much as there's a yellow flag out, there isn't anything overwhelming saying, dump everything and go to cash or go short or anything like that. At least not yet. Next week that could change. But as of right now, I'm just not seeing it. And we have, we're still above a rising 50-day moving average, rising 65-day moving average. We busted through the 23-day for the first time on the Qs in a very long time. We're just seeing a lot of these indicators reset. And I think that is the message is right now, it just looks like a reset. maybe a 10% is what is very possible and likely. I mean, a 10% correction, and we're already along that way. If you look at it, we're halfway there, right? So we're halfway there. So the question is, you know, if you're gonna potentially endure a little bit more pain, you're already halfway to the threshold. Do you want to be the guy or gal who sells, here, and then it just bounces back up on you? So you have to know where your uncle point is and understand where your levels of potential support is. Now, if we get down into this area, below 297, that could be a different story. But as of right now, you know, it's just cautious. It's not, I mean, the way I look at the market, it doesn't seem like the market's falling apart. I don't like the action of some of the leaders. I think that is probably the most concerning part of it. I don't like what's going on with, GameStop and AMC and all the short squeezing that's going on crappy stocks. When crappy stocks go up and really good stocks go down, that makes me a little bit more concerned. And there's no really way that I know to quantify that except looking at the charts, like things like, net, Cloudflare. We were looking at this potential inverse head and shoulders, and now it's starting to roll over. So, if we break below the 65-day, I own this particular one. If we break below here, I'll exit. But it's not good when you see, Cloudflare does this and GameStop does this, right? That's not good. So, again, I'm cautious, but I'm not going to go out and sell everything yet because I have levels that I'm watching on the indexes and things I'm looking for on individual on my indicators, and they have not shown me yet. They've not shown their hand to me yet. So I will stick with my plan. All right. Well, I hope this video helped everybody. Good luck with it. Leave me some comments below. I appreciate it. I try to respond to everybody, and tell me what you think. Where's the market going? Again, I appreciate everything. Go ahead and like and subscribe to my channel, and follow me on Twitter at AlphaCharts365. Good luck this week, everybody. Take care.